Opendoor has quietly delivered one of the most interesting setups we've seen in months, and most of the market still hasn't caught on. Today, Opendoor closed at $7.79, up just 0.5% on the day, and if you only look at the percentage move, you might think nothing happened. But the real story is not the percentage. The real story is the pattern forming underneath the surface. Opendoor has now put together 4 consecutive green days, and this kind of behavior almost always signals something structural is shifting. The stock isn't exploding upward. It's not selling off. It's doing something far more important. It's coiling. It's tightening. It's testing the same resistance level over and over again, and each time it hits that level, the reaction gets calmer, stronger, and more controlled. That resistance level is $8. 8 has now become the line in the sand. It's become the ceiling that Opendoor keeps tapping, brushing, or approaching, and each time, it feels less like a rejection and more like pressure building. When a stock repeatedly tests the same level without breaking down, it's usually a sign that buyers are accumulating, quietly, consistently, without the fireworks. This is what traders call compression. And compression is usually what comes right before expansion. What makes this setup even more interesting is how Opendoor has behaved relative to the broader market. Today's market was choppy. A lot of high beta names pulled back. Momentum was inconsistent. Yet Opendoor held green. That alone is a tell. When a stock doesn't follow the market down, especially after several days of strength, it means someone is supporting the price. It means dip buyers are stepping in. It means the appetite to own shares is increasing even when macro conditions are shaky. And that brings us to the second major force behind this moment, the warrant dividend. Over the last few days, more and more brokerages have begun displaying the Opendoor warrant allocations in shareholder accounts. Some show them as OpenW, Open, and Opens. Others show non-tradable assets or miscellaneous warrants. Some show partial units. Some show them pending. But the key point is this: investors are now seeing them. They can physically see the warrants sitting in their accounts, and that changes everything. The warrant dividend was always going to be a catalyst, but it wasn't until the warrants became visible that traders started to price in the implications. Owning one warrant from each series for every 30 shares gives holders long-term leveraged upside. If Opendoor gets back to $9, those K warrants are suddenly in the money. At 13, the A warrants start picking up value. At 17, the Z warrants come alive. This changes shareholder psychology. Instead of owning a single instrument, they now own shares plus optionality. That makes them more willing to hold through volatility, more willing to accumulate, and more willing to ride momentum waves. At the same time, short sellers may now face responsibility for delivering these warrants to the original share lenders. Even if the mechanics differ across brokerages, the perception of increased short seller obligation is powerful. Uncertainty is one of the biggest risks for shorts. If you don't know the exact cost of staying short, or what you're obligated to deliver, the safest move is often to reduce exposure. That reduction doesn't have to be dramatic to push a stock like Opendoor upward. Even small amounts of covering can help create multi-day strength, especially in a name with a high retail presence and a relatively concentrated float. So when you combine multiple green days, consistent tests of the $8 resistance level, warrant dividend visibility, and uncertain short seller obligations, you end up with exactly the kind of quiet pressure that precedes a breakout. But it's not just the structural and psychological elements that matter here. It's also the company's own narrative under Kaz Nejatian. Over the last 2 weeks, Kaz has been posting messages on home ownership, renters giving up, and the societal importance of restoring liquidity in a broken housing system. Each post reinforces Opendoor's mission-driven identity, and investors respond to mission. They respond to long-term narrative. They respond to leadership that speaks to generational problems, not just quarterly numbers. Kaz's messages have created a mood that fits the current stock setup perfectly. When a company is trying to break resistance, the one thing investors need is belief. Belief that the story is bigger than the volatility. Belief that the long-term path is upward. Belief that the fundamentals are improving even if the charts are noisy. Kaz's messaging fosters that belief. It doesn't magically move the stock, but it shapes how investors interpret the price action. And the interpretation right now is that Opendoor is preparing for something. It's stabilizing. It's forming a base. It's building a level of support right under $8. Another factor adding strength to this pattern is the volume behavior. Over the last 4 sessions, Opendoor's volume has stayed relatively steady without the wild spikes that usually accompany short-term rallies. That's a sign of controlled buying rather than frantic trading. Controlled buying is what leads to sustainable moves, not just one-day wonder candles. When a stock rises gently on steady volume, it means the foundation is strong. It means there's conviction. It means dips aren't scaring people out. It means buyers aren't worried about a sudden collapse. And that's why $8 matters so much. 8 isn't just a number. It's a psychological threshold. It's the point at which a lot of retail traders will flip from cautious to aggressive. It's where algorithmic systems will start signaling trend continuation instead of trend hesitation. It's where shorts may feel pressure to lighten up. And it's where sentiment can shift from nice bounce to possible breakout. Stocks often behave differently once they capture the next whole number. $7 feels like a recovery zone. $8 feels like the beginning of a new phase. This is also the moment traders love. Not when the breakout happens, but right before it happens, when things are quiet, when pressure is building, and when you can almost feel the tension on the chart. A stock that puts in 4 green days and repeatedly tests the same resistance level is telling you something. It's telling you that demand is growing. It's telling you that sellers at the top of the range are being absorbed. It's telling you that the market is preparing for a decision, and decisions at resistance levels tend to create momentum. It's also worth noting that we haven't seen any negative Opendoor news this week. No analyst downgrades. No bad headlines. No unexpected filings. The silence itself is helpful. When a stock is moving upward without catalysts, that often means the move is organic and not artificially inflated. It means the momentum is real. It means traders aren't chasing news, they're chasing price action. So the question now becomes, what happens next? The most likely scenario is that Opendoor continues to hover near the $8 level, maybe dipping slightly, maybe testing the mid-7s, but generally staying within striking distance. Then, once enough pressure builds, once a large buyer steps in, or once short sellers reduce exposure further, the breakout comes. When it does, the next region to watch is $8.50 to $9, which has historically acted as the next meaningful resistance zone. Breaking that zone would be the moment the warrant story and the market story converge, because $9 is where the K warrants start to come alive. But even if the breakout doesn't come tomorrow, or the next day, the important part of this setup is the behavior. Opendoor is acting like a stock that's done falling. It's acting like a stock that wants to go higher. It's acting like a stock with growing demand and diminishing fear. When a stock behaves like that, resistance levels eventually give way. That's why this is the perfect time for a video. This is the story behind the stock. The percentage move today may be small, but the signal behind it is enormous. 4 green days. $8 resistance. Warrant dividend visibility. Stable volume. Quiet accumulation. These are the ingredients that create breakout moments, and Opendoor is cooking with all of them right now.